Hello and welcome back to the channel. It is your boy PJ Trades. Today is Tuesday, the 10th, 2025, and we had an absolute bizarre session. Pretty wild session. The market for the first hour and a half, 2 hours was pretty much dead. And then we got a massive breakout to the downside and then a rip to the upside. I'm going to break down what we did today, how we traded it, and why I took these trades in the first place. So let's get kind of right on into the first trade setup of the session. So this trade setup right here, honestly, I would take 10 out of 10 times. I said this multiple times today to my community. I would look at this trade setup and say, hey, I'm taking this 10 out of 10 times. And here's the reason why. So on the higher time frames, on the 15 minute, on the 1 hour, we are stuck inside of this massive 1 hour bearish fair value gap. It's also a BPR gap. Okay, so we have a lot of resistance holding this market down right now. So we have this bearish move to the downside, which also at the same time here, guys, I want to notate that we actually flip a 1 hour gap to the downside. This gap goes inversion. And then this gap also goes inversion. Okay, so we have two inverted gaps to the downside. Now, if you look at this strictly on a 1 hour time frame, it's pretty simple to see that this market is now just retracing back into inversions before wanting to seek lower prices. But the market's been pretty choppy and pretty sketchy in the AM session. So it's really hard to read it if you're not jumping on higher time frames to see the overall picture. So a lot of you guys get stuck on like the 1 minute here and you're like looking for all these different setups and ideas, and you're really missing the bigger picture. Okay, so let me just reset replay bar this real quick. I don't know what happened, where my price went. So okay, so here we are here. So let's talk about the first trade setup of the day. So we're looking, remember, everything in this zone up here is a 1 hour bearish gap. It's also a 1 hour BPR gap. So it's high resistance to the downside here. And if I'm going to look to be bullish today, so many people ask me in the comments on TikTok, Paul, why are you bearish today? The market's bullish, yada, yada, yada. So listen, here's why. This market would need to flip this gap to the upside in order for me to want to be bullish on the day. Okay, but we're not doing that. We're respecting CE of the gap. We're rejecting, we're wicking. We're not getting any sort of move out of this gap to the upside. So I'm seeking lower prices because what I'm seeing here is this market is starting to build up. And let me just replay price. Well, let me show you the first trade of the day first. So let me show you the first trade of the day. So the market comes up, right? We get a money sweep and a manipulation into that higher time frame gap. So here's our money sweep, V-shaped recovery. On the 2 minute time frame, we get a beautiful 2 minute inverse. Okay. 2 minute inverse, and it's really simple. We get a retest of the inverse. We look for a short up in here, stops above the inverse. Target 1 would be at the swing low, target 2 at this swing low, and then eventually London low, Asia low. Okay, so that is trade number 1 of the day. We get stopped out for a 30-point stop. Market just doesn't behave and chops around. So at this point, whatever, I'm completely hands off and I'm waiting for the market to kind of show its hand. This is what trading is all about, guys. You're going to take stop outs, but that doesn't mean you should immediately flip bias thinking that you're wrong. Stopping out is part of the business. Like it's the business tax, as ICT says. You're going to pay the tax, right? Before you can end up making a lot of money. And that's exactly what happened today. We paid the 30-point tax to end up making the 120-point winning trade, right? So as this market progresses throughout the session, we're starting to build up LR. And I tell you guys all the time, whenever I see LR being built up and the market's it's failing to make higher highs and lower highs and higher highs, we're not getting any true displacement higher in the zone. And now we're building up really clean LR, right? LR simply means that it's low resistance liquidity. In this example, it's trend line low resistance liquidity, right? So we're building up. Okay. Here is when things start looking pretty juicy. Sorry, let me go back. I actually completely missed it to show you guys. Here's when things start looking pretty juicy. We get a breakout of that wedge, of this little channel wedge here. At the same time, we get this 1 minute inverse for value gap. Okay. Now, at this point, I'm looking to short this market. Okay. We get a 1 minute inversion to the downside, and we are then in a short trade like this. Okay. I believe this is where I entered. Let me just double check because I have to. Was this the entry? Yes. Okay. So stops were right above those wick highs here. And, oh, this is the reason why I'm confused. Sorry, guys. It was a 1 minute entry, not a 2 minute entry. So let me go back and fine tune this because it was a 1 minute inverse that I took. Right. So here it is, 1 minute inverse here. Okay. As you can see, price inverses to the downside, comes up, respects, and then finally goes to the downside here and seeks this liquidity and takes all of this LRLR and then now this LRLR. So look, we're building up 2 sets of LRLR. Okay. Here's the first set right here. And now here's the second set of LRLR. We're building up LRLR, right? Whenever I see that and we're failing to make new higher highs inside of a high resistance bearish zone, which again, don't forget the higher time frame bias here. This is a 1 hour bearish gap up here. We're rejecting out of this gap. Okay. So we get a 1 minute inverse here. The market goes inverse. I enter short. I believe I enter short right around, I think I'm in short here somewhere. Where is I? Oh yeah, right here on this inverse, I'm entering short. So I'm going to show you guys, we took about 14 points of heat on this trade. And it took a while for the trade to play out. But the market goes inverse, right? It respects it. It respects it. It's still respecting it. And then finally, the market takes and seeks this LRLR and then the bottom of this LRLR towards this sell side liquidity zone. And then displaces and gives us a 120 something point trade to the downside. Now, the overall draw on liquidity was London low. It didn't get tagged. It never got tagged, which is fine because as we're trading, we're scaling out on the way down. We're scaling money out on the way down, okay? And stops are getting ran into profit pretty aggressively here. So we're capturing this entire move and we're paying the trader on the way down, guys. We're never greedy holding a full trade here because there has been plenty of times where my full TP will get teased like this by a couple points. And in my younger days and earlier days of trading, this market would reverse against me and I would literally capture $0 on this trade. So the way I trade now is I am scaling out on the way down. As the market is coming towards my TP, we're paying the trader because we're correct on the trade. And in order to make money in this business, we need to lock in profits, right? We're not going to sit here and let this trade come back up and reverse against us. We've captured 120 something points. That's plenty of money. To put that into perspective, a 1 mini trader, okay, that's taking this trade, if I was short from my position, which was right around here, okay, if I'm shorting at 1 mini right here, okay, and my stop loss is where my stop loss was and my TP is down into here, look how much money that is. That's $2,400, right? We're not greedy. That's a lot of money. So anything in that range, you guys got to have a sweet spot on how much money you want to make. Like, what is your threshold? Like, is it $500? Is it $200? Is it $100? Do not be greedy when the market moves in your direction. Pay yourself on the way down or the way up. So that is today's day. That's how I traded this today. The market's building up LRLR in both sides here. We have little channel LRLR and channel LRLR here. Wow, that's a tongue twister. I try to say that 10 times fast. But the market ends up respecting that 1 minute inverse. And we end up just taking this trade, holding it. It was painful. We did take a little bit of heat. But then finally, the market displaces towards all of that liquidity. So the market, whenever you guys see low resistance liquidity building up, what you're going to notice over time and as you're backtesting and studying, when the market, when you're correct and the draw is the LRLR and it's going towards that low resistance liquidity, look how fast the trade moves. That's why I love trading when it's building up low resistance liquidity, because if you're correct on your trade, it's going to be a swift move towards that liquidity point. And as you guys can see here, this thing just absolutely steamrolls down to the downside. So another day of just being convicted in your draws. The higher time frames, guys, the higher time frames need to be your best friend. Stop getting so stuck on the lower time frames, the 1 minute, the 2 minute. The 1 hour is looking bearish. We are respecting bearish order flow. We inversed a 1 hour gap to the downside. Two 1 hour gaps to the downside. So I am not comfortable looking with longs yet, right? Until this market at least takes a little bit more liquidity to the downside, which then watch what happens after we exit our trade. Now the market moves higher. Now the market starts to move higher because now it has enough juice. You have to think of the market like this, guys. If the market's sitting here and it's not going any higher, it probably ran out of orders. It doesn't have enough liquidity to go higher. So what's the probability of the market pulling back to grab orders? It starts to become really high, especially when you're inside of a bearish gap, right? So the market comes down, it grabs all this liquidity, and all this liquidity here, reverses, and then goes towards the opposite draw liquidity, which is the Asia high. So that's how I structured today's trade. That's why I was bearish on the day. I know it was a big question on the TikTok page today. Why was PJ bearish? That is why the 1 hour was being respected. We were losing momentum to the upside. We needed to seek more liquidity to the downside before going back up. So that's today's trade review, guys. I hope you have a blessed Tuesday, man. I'll see you guys on a trading floor on Wednesday.